Hi, everybody, and welcome back to FANG Friday. This is Ross Healy, the chairman of Strategic Analysis Corporation and a senior portfolio manager at McNichol & Associates Asset Management. Well, I don't have a definitive date yet, but BNN Market Call has let me know that they would like me to be on air this coming month to celebrate the 24th anniversary of that program. I was the first ever guest on Market Call way back in June of 2000. Back then, BNN was known as Report on Business Television, ROB TV. And its studio was shoehorned into a modest house on Jarvis Street. At that time, I caused a huge stir, certainly among their audience, when I said that Canada's biggest stock, Nortel, then selling at $126, was only worth maybe 25. A number of people called in and told ROB TV to never invite that poor soul on again. 2 or 3 said, "Look at that white hair. I don't think he understands the 21st century." Well, as it turned out, I did understand the 21st century, and I like to think that I still do. I suspect that we are in another high-tech bubble, the so-called AI revolution. But I also suspect that it may not be ready to pop just yet. I think, however, that when it does, that we, that is you and I, will see it in our SVA stock charts. As I hope, as you have already experienced with 2 of the FANGs, that we can avoid the steep losses that result in such instances. However, that is then, and this is now, and we want to get on with looking at the FANGs today. Last week, we looked at the first quarter earnings, and all the FANGs, save for Tesla, came through with flying colors. However, as Wall Street lore has it, buy the expectation, sell the news. And this week, we are getting some profit taking. As the SVA methodology has maintained its buy-hold ratings on every one of the FANG stocks, maybe except for Tesla, which I personally have rated as still a sell. Today we will want to see what the profit taking has done to the stocks themselves. So let's take a close look at all the FANGs and what went on this past week. As always, before I do like to say thanks to everyone who likes this video and all our subscribers. It really helps to grow our channel, and we appreciate it greatly. And if you would like to learn more about our valuation service, go to www.strategicanalysis.ca. Okay, let's start off with Amazon. And you can see that Amazon is still within its channel, but it has been slipping a little bit. And today it's off, I think, another 2% plus. It's getting pretty close to its bubble price, where, if history is any guide, I think we might get another rebound. Alphabet is kind of rolling over at its bubble price, and its bubble price has been, of course, the very, very long-term peak for this stock, going back at least 15 years. So no particular surprise that in a profit-taking period it will set back a little bit at any rate. Microsoft, very much the same story. Nice earnings, but not terribly vibrant, I would say, and the stock is banging up against its HB2, which is 12 times book, and has been a little soft just lately. Netflix is almost up at its HB2 price, again, 12 times book. And it remains to be seen if that can break out. They had beautiful earnings 3 quarters ago, 2 quarters ago, and again, very recently, only the third time, it wasn't quite so lucky and the stock set back. However, they were nice numbers, and a breakout is still possible. We will be watching this very closely. NVIDIA has, of course, they had absolutely spectacular numbers, and the stock has roared right up to its HB7, which is 43 times book value. And now it's trying to see if it can break out again. We'll keep a very close eye on this one. Apple, Apple, of course, had very nice numbers too, with the big promise of a huge stock buyback. And perhaps of all of the FANGs in any market weakness that we've had in the past week, Apple has held up the best, I think, on the promise, first of all, of share buybacks, and secondly, on the promise that they are going to raise the ROE and the upside potential of this company quite substantially. So hanging in nicely at, you can see here, just about bang on its putative HB6 price. That's 33 times book value here. If I eliminate the possibility of a balance sheet increase and look basically for share buybacks. Tesla just continues to thread the needle there. Not much that we can say right now. Finally, Meta has, that's run up, as I've showed you before, against its old high, hit three times previously at its bubble price. And despite very, very nice earnings, nonetheless, its guidance has been a little soft. And here, if we look at the shares very closely, we can see that the shares are kind of struggling to hold at its bubble price. That's 7.4 times book value. So we'll be watching very carefully to see if it can hold or whether we are going to get a confirmed sell signal here. Now, to briefly recap, as we saw, the FANGs have pretty much stayed within their channel boundaries. We also saw that at least one of the FANGs, Amazon, is coming close to a floor value, below which we would receive an SVA sell signal. With its earnings forecast and FM fair market value measure ticking up, however, I don't think that we should be concerned. But then, neither should we ever try to outguess the market. I would actually be looking for a nice little trading rebound here. Alphabet, Microsoft, and Netflix have almost reached up to the next highest boundary condition, and I have to tell you that stocks rarely break out on their first try at or near a boundary point. That is one of our structural valuation breakpoints. So I was not expecting anything here. A modest setback is a reasonable response from these stocks. Now, talking about stocks close to or at their next higher boundary level, it looks as if NVIDIA may be trying to break out over its HB7 price. That's 43 times book on superb earnings, as we discussed last week. We need to keep a close eye on these shares, as there may be a good renewed buying opportunity coming up for a nice trade here. But nothing comes easy. Of all the FANGs, maybe NVIDIA aside, Apple seems the most reluctant to set back on any market weakness. First, those share buybacks may be now providing some price support. But more to the point, I expect that the promise of those huge buybacks with the resulting improvement in its return on equity and the hope, therefore, of a much higher market valuation is what's driving Apple at present. Tesla, despite a somewhat worrisome news background, is just hanging in above its bubble price, 7.4 times book, despite its sagging fair market value trend. It almost looks as if the market is hoping maybe for another surprise announcement from the company. My sole concern among the FANGs is Meta, which continues to look wobbly at its bubble price, that's 7.4 times book. It has hung in very close to its bubble price so far, and its latest quarter's numbers were pretty darn good. But modest guidance seems to be kind of overhanging the shares, and hanging in would appear to be the watchword for the stock. With no sell signals and everyone still riding their positive channels, I still expect a positive start to the market heading into the summer. Anyway, that's all for this week. For now, this has been Ross Healy, the chairman of Strategic Analysis Corporation and a senior portfolio manager at McNichol & Associates Asset Management, reminding you that nothing, including investing, is difficult if you have the right tools. I will see you next Friday.